Welcome back, traders. You are watching a rate-out review of how U.S. financial markets are trading. Key stock indexes reversed upward in a mid-week. The Fed's minutes gave a fresh impetus to Wall Street as the traders have not discovered a cause for alarm. In this context, major stock indexes managed to gain ground. They are trading higher in the New York pre-market. Wall Street indexes closed with confident gains yesterday. The Dow Jones closed 0.6% up. The Nasdaq gained 1.5% and the S&P500 added 1% to close at 3,978 points. Today, the stock market is extending a positive trajectory. Wall Street is trading with a cautious optimism, so indexes are gradually regaining their footing. The end of the week is packed with important economic data. The S&P 500 is expected to trade in the corridor between 3,920 and 4,030 points. Stock investors did not find any hawkish surprises in the Fed's minutes, so they are taking a break after a long losing streak. The minutes confirmed that most policymakers advocated for a rate hike by 50 basis points in June and July. The market seems to have accepted this agenda. Besides, the possibility of a softer policy moves at the following meetings served as a sedative. Some Fed policymakers supported the idea of putting interest rates on a halt in the autumn, while other members suggested more rate hikes by a half a percentage point in September, November and December. In essence, the market found out that its forecasts were confirmed, economic conditions remain the same. Hence, we suppose that the market will remain volatile and sensitive to news at least until the end of the week. Back to the stock market. Recently, retailers crashed the Nasdaq, but things are not so pessimistic. For example, Nordstrom upgraded its forecast of quarterly profits, which could revive the high-tech sector. Twitter stock rose 5% in the pre-market in the light of the news that Elon Musk increased his takeover deal by another $6.25 billion from his own capital. Moreover, satellite companies were overwhelmed by optimism. Pentagon announced its contracts worth billions of dollars. In response, stocks of Maxar and Planet Labs jumped 15% and Black Sky stock surged 104%. On the minus side, Nvidia stock dropped 5.5% in the pre-market after the company unveiled its forecast of dwindling sales of video game chips. Apple stock lost 1.5% because the company was not planning to expand iPhone production rates. All in all, we assume that Wall Street will be able to continue growth for a while. At the same time, the US dollar shed 0.24% yesterday to close at 101.81. The index managed to consolidate at about a one-month low in the pre-market. The intraday corridor for the index is seen between 101.70 and 102.30. The US currency turned sour as the US Fed is not pushing ahead with the aggressive monetary tightening. Fed policymakers reckon that after a couple of rate hikes, the regulator will be able to assess the consequences of a monetary tightening and adjust its policy to economic conditions. Fed officials admit a pause in the rate hikes in the autumn that does not benefit the US dollar. In this context, the bond market is trading on a pessimistic note. Yields of 10-year treasuries fell to the lowest level since April. As for the economic calendar, some data indicated improvement in the labor market, while revised GDP data discouraged investors. The US economy contracted 1.5% on year in the first quarter, a bit worse than the expected 1.4% decline. Imports increased more than expected by 18.3% against 17.7% in the flash estimate. Experts declined a bit less than expected by 5.4% against minus 5.9% in the flash estimate. Capital investments grew less than in the forecast. Consumer spending rose more than projected. The U.S. Labor Department reported that initial unemployment claims went down by 8,000 to 210,000 last week, more than the consensus of 215,000 new claims. The USD CAD pair slipped yesterday, though it's still trading not far away from 1.2800. The currency pair is making minor fluctuations between 1.2790 and 1.2870. The trading instrument neglected the Fed's minutes released yesterday. It's still trapped sideways. Fresh statistics from Canada came in a mixed today. Canada's retail sales remained flat on months in March, though analysts had projected expansion by 1.4%. The culprit for the flat dynamic is a slump in the car and the spare parts sales by 6.4%. Excluding car sales, core retail sales grew 2.4% in March, following a 2.1% increase a month ago. The actual figure surpassed the forecast of a 2% growth. In the crypto market, the rally was followed by massive sell-offs. After a climb on Wednesday, Bitcoin has lost 4.5% today. The token passed 28,600, the lower border of yesterday's forecast, and this trend is clear from the point of a slowdown in the global economy and the risk of mood. Yesterday, JP Morgan said that Bitcoin's fair value is 28% higher than its current price. Popular cryptocurrencies have already lost 3% or 18% today. The intraday corridor for Bitcoin is defined between $27,800 and $29,700. Today, Wall Street has a chance to regain fragile optimism. Don't forget about higher volatility in all trading instruments. Trade at a profit with the InstaForex and see you tomorrow.